I know a lot of people are going to be familiar with your work, but this podcast does reach, some fresh ears every now and then. And so I think maybe briefly, if we can get this kicked off with just kind of who you are, what you've, done, to become known as Plan B, and the model or models that you've published, and then we can get rolling with some more questions from there.
Yeah, okay. So I'm a Dutchman and 40, and I'm an institutional investor in the Netherlands. So I work in a team that manages a multi-billion dollar balance sheet. And we invest in all sorts of things, but especially fixed income, mortgages, loans, consumer loans, corporate loans. And yeah, so I'm always interested in investments and investing. And it was in 2013 that I discovered Bitcoin. I picked it up at some website. I thought it was zero hedge, and from then on, I started reading. Took me a while to invest privately. Um, that was in 2015 for the first time, in 2016. But yeah, ever since I wrote that one article with the model, it's the stock to flow model in March 29. Life has been a roller coaster with my Twitter account filling up with followers and questions, and yeah, it's been really a rough ride, and we're in yeah, in the moment of truth, if you will, for the model, because when I made the model, the price was about 4,000, and right now it looks like well, it starts to look like the model might be right, and it's very exciting time for me.
Well, it's an interesting day even to speak to you because I'm sure you're aware of the stock to flow multiple bot or account on Twitter, and the current. Now, I'm not sure if this is accurate. You can update me if it's not, but the current multiple price is 31,000, and the current market price is, let's say, 30,000. It's been fairly volatile over the last few days. So, at least to frame this discussion again for people that may not be too familiar with your work, it's seeming like it's on the money right now. But we'll get into, hopefully throughout this discussion, some of the reasons why that may be the case, and maybe in the future may or may not be the case. So, I'm looking forward to getting your input on that. But just on the point that you just brought up, discovering Bitcoin can be, kind of like a mind blowing, life altering experience for anybody, right? Like it really kind of changes or has the capacity to change your perspective on how you look at economics and finance and government, and even a lot of stuff in people's personal lives, which I've really liked and enjoyed to dig into with guests on the show. But very few people have the experience that you've had, where you put something out in the space, and this space is rife with people that contribute voluntarily their intellect, whether it's reading, podcasting, models, et cetera, art even now, and it's great. But as you said, your model became very popular, or at the very least the subject of a lot of conversation. And since then, I would imagine that your life, at least your anonymous online existence, has changed dramatically. And I'm just wondering what that's been like for you over the last 2-3 years.
Yeah, great question. It's similar. It changed a lot actually. So if you count from 2013, I'm in Bitcoin 7 years now, which is long for Bitcoin, but not really long as being a real OG.
No,
But
it's
it's
not bad.
not
Yeah.
bad though. But no, I was hooked from the start, from reading the white paper and seeing this 8 or 9 pages, if you count the references, article with so eloquently and so simply put a thought out there that is simply amazing. It's an invention. Why don't you? Well, normally you need banks for giving you account numbers and passwords. Now you just make your own random number and use the elliptic curve encryption to do the private key public key thing, and then the proof of work that allows to have a monetary policy that's also totally uh, yeah, baked in math and and code, and not no central bank, no government that touches it. The thing is so simple and so thought provoking that it caught me right from the start. And once you go deeper and deeper and you read, well, it's very simple actually. You look at the references. That's where the article or the white paper ends. You look at the references. You see Adam Beck, who is very active on Twitter, and you start following him and read his other stuff. You get to people like Nick Szabo and the core developers and the first investors like Max Keiser. Um, it has been a journey for me that is all encompassing. It's 24/7 almost. It's scary actually how you get sucked into this thing, and and of course also, like you say, to the point that you start questioning your personal life choices, like being healthy. I'm doing a lot more sports than I used to do. I look at my food, and if there's something on the table that is processed food, I think fiat food. I don't know who came up with the term. If it was safe
I
indeed.
think it might have been safe. Yeah.
Yeah. So yeah, you see it everywhere, and mind you, for me, it's maybe even weirder because I talk to central banks every day, and I see the weirdness of quantitative easing every day. I'm a seller, right? I sell stuff to the central banks, and and I've been seeing this from 2008 on. And getting worse and worse and weirder and weirder. So I guess without me um, being active in my daily life as an institutional investor, together with central banks, doing this quantitative easing, being a part of the quantitative easing and seeing how weird it is, I would never have discovered Bitcoin and see Bitcoin for the solution. It can be, or it is in my eyes, to this this quantitative easing and negative interest rate things we see around us.
Two questions about that. One is, and this one might be, it's a difficult one to answer for a lot of people, but have you spent any time thinking about, you mentioned kind of some of the lifestyle changes that have occurred since being kind of obsessed with Bitcoin. And I'm sure, I know that everyone listening to this, it resonates with them. We're all kind of down the rabbit hole and with no ability to climb out, basically. But have you reflected at all on why you think those lifestyle changes have been inspired as a result of being so deep into this stuff?
Yes, it's one of the things that you start thinking about, or is that you have been listening to experts and authorities and trusted third parties, like Bitcoin used to talk about. You've been listening and trusting to those people in areas that you were not an expert. So for me, that would be the medical world, for example. I know nothing about medicine or doctor stuff. Uh, but then questioning authority and third parties, that's Bitcoin, right? And peer to peer, verify, don't trust, verify, those kind of things. Those are really interesting. So you start to do that in all parts of life. Don't trust, verify, read the medical articles, follow the doctors on Twitter, uh, look up who are the real experts. So I basically was um, doing this already because of something I cannot talk about, but that started earlier in my life in around 1999, 2000. I have been reading zero newspapers and not watching television. I do watch Netflix, but not the normal since 1999. So no mainstream media, and that is so liberating. I can suggest that and advise that to everybody because it
Yeah.
opens your mind. It opens your mind, and Twitter is such a wonderful medium because you can just research who are the experts in a certain field and just follow the guys and women that are the real gurus in the field, and you learn so much in everything.
Yeah, I mean, you curate your own news and then you go direct to the source. I mean, what could be better, you know?
That's it.
And you know, I share that you know, the mainstream news media and TV in general has been something that I've abstained from for a long time as well. Like you know, I watch some movies on Netflix from time to time. But yeah, it's liberating. And the flip side of that is it's frustrating to see how indoctrinated other people who haven't taken that approach, who spend so much time in front of the mainstream news media and in front of the TV, it's so obvious to see the level of indoctrination and propagandizing that goes on as a result of exposing oneself to that. And that especially in light of the past year, has been a frustration for me, to say the least.
Same here. Same here. I mean, I think I turned a lot of people around me, friends and families, and that also stopped doing the mainstream media thing and went on a don't trust verify search themselves. It's I find that very hopeful, and I, I do that by asking questions. I like the Socrates method of asking questions, and people then start wondering or go search for the answers themselves. Not everybody, but some do, and
Yeah,
that's
and I think one of the amazing phenomenons, or one of the amazing benefits of the Bitcoin phenomenon is that because, as you say, we have this quote unquote number go up technology that's bringing everybody in, and then many of those people, or at least some, will kind of gain the ethos of don't trust, verify, and some of the other catchphrases that are associated with the community, and they will apply that to different areas of their life, and that's what I find so encouraging because changing behavior can be such a difficult thing. And if you identify one of the problems in the world as so many people being ingrained in such destructive behaviors, then you can get a little cynical about how that gets turned around. But just seeing the Bitcoin quote unquote community as varied and broad and distributed as it is all around the world, seeing that it's not just about balancing your financial portfolio to increase your annual gains over the course of a decade, but it's actually far more than that. It has ideology, it has changes in lifestyle, it has all this kind of stuff, which is, from my perspective, what I've seen rapidly changing people's behavior. And that gives me a ton of hope because it makes me think like, oh shit, like even those really, maybe people that were deep into another type of ideology for a long time. Like I've had people on this show that were, staunch socialists at the beginning of 2020, and now are hardcore Bitcoiners less than 12 months later. And so that kind of stuff really gives me hope that, there's a genuine social phenomenon happening here as well.
yeah, oh, absolutely, and that drew me to Bitcoin as well at the time. It's sometimes it's the conspiracy people or the lunatics or a lot of wishful thinkers. But if you look at the Bitcoin community, even back then, maybe especially back then, uh, those were the brightest and smartest minds that I have ever encountered, and still the level of discussions that we have, like the discussion we're having right now. I don't have that very frequently at my work or outside. It's I see people from NASA, from Google, from I look at Michael Saylor and Preston. They're all MIT um, aeronautic experts, and uh, those people. They know what they're talking about, and they know to ask the right questions. So discussing with doctors, with MIT, with everybody actually that is a free thinker, and is very exciting. And I even draw this line a little further. You for sure, yeah, you must have read the book The Sovereign Individual, which was written in
Phenomenal.
19.
Yeah.
Yeah, it's a must read also for the listeners. Um, and that's my worldview, that there is a, a, um, a country, if you will, a group of people in cyberspace that thinks alike, free thinkers, critical thinkers that find each other through Twitter, through podcasts like these, uh, and that are starting to change the world. And yeah, it's very, and that is much more maybe than the money and the freedom that gives, which is important, of course, because it gives you more time to think. But the real thing is the thinking and the people that you meet, and the it feels like a renaissance, if you will. And
Yeah.
it's, yeah, well, yeah, I'm very excited about it.
It really does. And you having been in the space since 13, to me and myself kind of started paying attention in 14. There seems to be a marked difference over, like, let's say the last 2 years. Now, you can never dissociate number go up from any of this, because that is a huge pull on people's, at the very least, their attention string. Like, it's hard to ignore this new form of money that's just skyrocketing, and it's, you hear the stories of people being made rich and all that kind of stuff. But in the past year, in 2020, I really think that, in addition to number go up, and let's say that's still the primary thing that pulls people in, I think, given the backdrop of what's happening in the world, in all sort of domains and areas, I think people are increasingly looking at this community in cyberspace that you mentioned, or this country, this parallel system that's emerging in cyberspace, and they're seeing, that people are positive, motivated, intelligent, independent, taking responsibility, uh, trying to figure things out for themselves, supporting one another, like all of these really positive attributes. And I think people are seeing it and saying, I don't know much about economics, finance, investing, money, but I'd love to be a part of something like that, because I'm just tired of the bullshit and the boredom and the monotony and the disingenuousness and the dishonesty of the life that I'm, forced to be a part of in my daily life. So I want a piece of that thing over there. And I think that's a big reason why we're seeing a lot more people kind of defect to the Bitcoin country.
Absolutely, yeah, absolutely, and they want to be part of the discussion. They want to be part of the wealth, of course.
Yeah.
That's also one thing, but it's also, it's once I noticed that also artists are a big part of a community, right? And they're here for, well, for sure, not the money as the first thing. So they sense an energy, they sense something going on, an artistic thing going on, and which, well, art and science also always go hand in hand. So I think that's a very important thing to notice, and I notice it around in my following base as well. My followers are, um, well, a lot of investors, of course, but also and more artists and DJs, for example. A lot of DJs with millions of followers. I ask myself, why are they following me? But it's, well, it's music, it's memes, it's everything, and yeah, it's a movement far bigger than it is an investment.
Well, freedom is a popular idea. So when people see freedom in all of its different manifestations, and art is obviously a part of expressing that, different elements of freedom, it's an attractive thing, right? I think that's had a pull on a lot of us. And I'd like to ask you, you mentioned that you deal with central banks and you work in the in legacy finance, let's say. Um, Two questions. Kind of, what was it like, or what is it like, having one foot in that? I think what many of us may agree is kind of a what's the word? Kind of a crumbling legacy financial and political world over there, and one in the new emerging, Bitcoin world that we've been discussing. What is that like? And two, did that have much of an impact on when you first became aware of Bitcoin, wanting to learn more about it? Because I often think about, what would the Genesis block, what would the Bitcoin phenomenon, how would it have organically grown in any different ways? Now, perhaps not at all, but how would it have been different if that message in the Genesis block wasn't there? Chancellor on the brink of the second bailout for banks. I mean, I consider that the political statement of the century. And I do wonder, without that, would it have pulled on the libertarian community as much if it was just kind of a label, a digital network launched on the internet without label? Now, I'm sure the market would have figured it out eventually, but it's interesting to think about how it may have grown differently. But for your perspective, being in that world and coming across Bitcoin, were you dissatisfied with the way things worked in that world? Did you have, were you aligned with libertarian sort of thinking or ideals, or at least feeling that the, state had grown too large or too influential in people's lives? Like, was that a part of the interest for you?
Yeah, to be honest, it was kind of, and still is, kind of Kafkaesque. If you, it's like you're in the Kafka novel Der Proces. You're in. I don't know if you read it. It's a must read. You're in both worlds, and they're so totally different. It's you're falling from one amazement in another amazement every day. For example, the um, we're looking for returns. Our world, an investor looks at the world very simple through risk and return. So we're constantly scouting and looking for risk and return opportunities, high risk or low risk, high return. And then Bitcoin comes along, which is very high return, average 200% a year, but very high risk as well. 80% implied volatilities on the options right now, which is a very high Sharpe ratio, which is about, well, it can't be actually. It's like the impossible heaven for investors. And then on the other hand, you see no investors in the traditional world interested in it. They're all still talking, as we speak today, about that it's for criminals. Well, they did the same thing with internet, right? Internet was for porn and pedophiles and even Nobel Prize winners were saying its impact would be small, like the fax machine, right? It's and that's the world I'm living in today. It's you don't get um, you don't get flowers for bringing up the topic and in a meeting, or even they laugh at you. So it's something you avoid and on the other hand, let's face it, the in the traditional world and the central bank reality with negative interest rates and debasement, quantitative easing, we make use of that as well in the traditional world. We earn our money with that. In the Cantillon effect, we're top of the chain, so it's good for us. Imagine if we do mortgages, so I need money to lend out the money to a mortgage borrower. If I uh, lend that money from a central bank or in Europe with negative interest rates, I get interest rates. I used to pay interest rates for getting the money, but now I get interest rates for getting money. And then I take that money and I bring it to the other side of the table to people wanting it, and they pay me money as well. They pay me interest, so I get interest rates from two sides. It's like a crazy world. It's like, and imagine this: all the models that we're working with, all the Excel models, the Python models, the R models, they're cash flow models. So we discount cash flows with positive interest rates, and now we have negative interest rates, and those models basically stop working. The outcomes are really weird, and you start thinking, well, what should we do? Should we trust the outcomes, or should we sort of jump to other benchmarks to decide whether an investment is good or not? Because, well, net present values are very easy with low interest rates, right? Even the 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 not so good investments start looking good. Maybe we should look at payback time or something. So the whole discussion is kind of weird in Plan A, if you will, in the traditional finance, and then stepping into Plan B in the Bitcoin world, it's so clear, so simple, so obvious, and it's a totally different world. And then especially with the derivatives markets like futures, cash and carry strategies that are basically risk free, giving you 10 or 20%. Those are returns that we never ever get as large institutional investors with like pension balance sheets and stuff. So it's weird, weird, weird.
Do these people know? I mean, because you work in that world, and then you also get to come and hang out in Bitcoin land, and the disparity between the two, the contrast is, I'm sure, jarring and quite obvious. But like what is the rationale that these people that you're working with on a daily basis, like, do they know what they're doing? Do they know what's going on here? What's the, and I don't mean with Bitcoin, I mean in their own domain. Like, do things seem normal to them, or is there a lot of scrambling around saying, the cracks are beginning to emerge and everyone's just trying to patch them up as they go? I mean,
Great question.
what is the legacy world thinking right now?
They know it's wrong. They know it will end. Each one of them. Each one of them. So all of them have Bitcoin personally that I know of, right? All my colleagues, the 10, all have Bitcoin personally. Um, it's like the global financial crisis in 2008. So in the mainstream media, you read things like nobody saw it coming. It was a black swan event, etc., etc. It was not, because everybody in the banking sector that was close to the fire knew what was coming, because the credit default swaps were creeping up and up and up for months. So you knew there was something was going on, like right now, right? It always reminds me of that period when I look at the amount of negative interest yielding government bonds, which is in the trillions. I think it's 20 trillion or so, 25 trillion, and
Mhm.
it creeps up every day, more negative interest yielding bonds. And that's not okay. That can't go forever. It will blow up one day. But well, it stops until it goes on until the music stops, and we're earning big money. So it's like the turkey graph from Taleb. It goes on, and you earn, and you earn, and you earn, and one day it's Thanksgiving, and then your head gets chopped off, and we all the incentive structure, we all know that is of course on a yearly basis. So we get our bonuses on a yearly basis, and if you survive another year, you can well, whatever, and and then you'll see what the next year brings. So, but most of them know that this will have to result in something completely different that we're living. It can be a debt reset. It can be hyperinflation. It can be another alternative system like Bitcoin. Um, we don't know. We don't know what the trigger will be either. I for a moment thought it was COVID. So we were looking for that trigger long time. But maybe we need another trigger, or maybe the amount of quantitative easing, the trillions and trillions that were printed since Q1 last year, will lead to negative and unintended consequences later on in the process. Maybe later this year. Who knows?
Yeah, I mean, I think that's unavoidable that there's a lot of unintended consequences that emerge from that. Do you have any sense of, and this is the $64 million question, right? Like, when are we going to see kind of an unwind begin? And I think you could make a case that we're seeing the effects of these policies. Well, we've seen them over the past 10 years. And if we've just done 10 plus years of these sorts of policy interventions in the last year, presumably we're going to see a lot of particularly social consequences as a result of these ongoing attempts to shore up this failing system. But do you have any sort of semblance of an idea of like when a genuine unwind of the system as it is now may begin?
Yes, I do. I'm just old enough to have experienced the um George Soros, pushing the pound out of the euro bounds at the time. So at the time, the euro was far before the euro was actually created. Was in 1999. Far before that, the currencies were in some kind of band. It was the EMS band, so they had to be close to each other. Otherwise, governments had to reduce their debt, etc., etc. But then the UK was sort of at the lower end of that bound, and it's a very dangerous place to be, because there's a lot of speculators and a lot of big hedge funds that are trying to make money, of course. So George Soros, and there's a lot of books about this, and I advise people to read one or two. It's very similar to current situation. George Soros just pushed the UK pound, the British pound, out of that band, and it happened very slowly and slowly, and it was slowly then or gradually, suddenly then. Well, what is it?
Gradually, then suddenly.
That's the
Yeah.
one. And it has to do with derivatives markets as well. So Soros was obviously pushing for this short squeeze, if you will. They saw the UK was in trouble, and they were pushing them over the cliff, but they couldn't do it alone. So they were hoping for others, and others were looking as well. So they were thinking, well, there is a non-zero chance that Soros is going to succeed in doing this. So maybe we should hedge ourselves a little bit. And of course, the little bit of hatching by a lot of people created another effect and another effect. And then, well, things became a self-fulfilling prophecy, and that can go very rapidly, as we have seen lately with GME, sorry. So I think that's basically what you see happening right now. What I find very interesting is people like Michael Soros, Michael Saylor, not Michael. Uh, it's George Soros, was it? Michael Saylor with MicroStrategy. That is also, um, yeah, he has done something amazing, right? A cash-rich company, a tech company with great margins that somehow feels that those cash balances are a danger to his company because yeah, well, the money printing and cash is trash, etc. So he starts protecting himself quite well, it's a ballsy move he put all of it in Bitcoin. But I can imagine a lot of companies with a lot of cash balances that are already diversifying into other uh, assets, short maturity assets, other foreign exchange currencies, but they start looking at Bitcoin as well. And now Michael is open sourcing his playbook to everybody. So how do you do that legally, IFRS, accounting wise? How do you treat all that, and how do you do it? I think those are the gradual effects that slowly, and then suddenly, give us a major move, a sort of short squeeze, if you will, that we are seeing in a small setting today in the GME stock. And what do I mean with a short squeeze? Maybe it's a negative gamma squeeze. uh, Everybody, the whole world will be scrambling for Bitcoin. That's what I envision, at any price, because there will be a moment in time that everybody realizes this is going to shit. The dollar, the euro, the whatever, something is going to happen. They sort of said it already. It will happen. I have to hedge myself. I need dollars. I need Bitcoins right now. And everybody, the whole world will be scrambling. And that will be the day. Now, when will that be? I think my model, if you will, sort of shows the route, because um, it shows a $5 trillion market cap for Bitcoin in the next couple of years. Actually, end of this year, and then from the years until the next halving, which is quite a bit higher than it is right now. Right? It's like a 10x from here.
Hmm.
Um, but 5 trillion is already pretty large. It's getting, but not large enough to be really a big asset. Like the stock markets are like 100 trillion, the bond markets are like 100 trillion. The broad money supply is the global is about 100 trillion US dollars. So it is that next phase, if you will, not phase five that we're entering right now, but phase six that we're entering after the next half in 2024. So the period 2024, 2028. In that period, we'll do another 10x, maybe 20x, and then we'll get to that 100 trillion, 50 trillion, 100 trillion level. And then, well, it will be so big, it cannot be ignored anymore, and it will for sure trigger all kinds of effects. So, in a way, um, my model predicts those are the price levels at those times. And, well, those should be the times that it cannot be, then something big has to happen right then. And um, there's also a big critique against the model that it goes to infinity, right? Stock to flow goes to infinity, and then
Mm.
the Bitcoin value should be infinity. Well, no. Um, what it shows is that you can interpolate, you can follow the model until that 100 trillion level, because that's where the latest data point is, the real estate market value. Maybe it's a little bit higher depending on how you look at it, but we we can follow the model until we don't have any data anymore. Then it will be uncharted territory. So I wouldn't make any predictions higher than 100 trillion market cap, or well, and that should be 2028, sort of, plus or minus 2 years.
When you say don't have any data anymore, can you elaborate on that?
Yeah. So if we look at the second model that I made, the stock to flow cross asset model,
Hmm.
it combines not only Bitcoin data in there, but also gold, silver, real estate, and diamond market, the global market. And that makes it not a time series, but a cross asset model, if you will. And we're now, or we have been in the last years far below, for example, the gold market value of 10 trillion US dollars. And in the model, the real estate market value is 100 trillion US dollars. So we have data. The model, the model line is fitted on Bitcoin data, but also on that gold data and that real estate data. So um, we don't have to extrapolate. We don't have to. We're not going outside the model boundaries, the data boundaries, to make a prediction. If we say, the model basically says, okay, if the stock to flow is of Bitcoin is the same as gold, then the market cap should be around the market cap of gold, and the same for real estate. And that's not a wild guess, because we already know what assets with that kind of scarcity are worth. So it's when you go over the 100 trillion market cap, if you go beyond real estate, then it becomes spooky. And then, well, I would say, uh, yeah, all bets are off, or don't follow the model anymore. Maybe there isn't even a dollar anymore by then. Who
Right.
knows?
Yeah, it's really interesting, and I think I love that people. I've heard you say before that you had the model for a while and you didn't publish it, publicly, and then I think it was maybe it was early 19 or late 18, or people were predicting lower prices, and you just felt based on the modeling that you'd done that was probably not going to be the case, and the reason why is the model prices upper and lower bounds that you would come to, and then you publish the model, and we all know the story since then. But it's one of those ones that's difficult to even have a framework for assessing, because it kind of runs counter to, well, a lot of your assumptions about how things work, how things grow, supply, demand, valuation. And one of the things I wonder about it is Bitcoin is such a unique phenomenon. Um, and being that it's a monetary phenomenon, it's so integral into everyone's life. I mean, the money rabbit hole is an extremely interesting rabbit hole that I think a lot of Bitcoiners have begun to go down or are very deep in, and that's almost more interesting than the Bitcoin rabbit hole. Bitcoin's just kind of at the end of the rabbit hole, saying, I'm the best version so far, but the real rabbit hole is money. And I wonder, what do you make of what your model says about the emergence of this this phenomenon on the world? Because I get that we can, perhaps it provides some guidance for predicting what the price may do within certain bands up to a certain point. But what do you make of the fact that an asset like this has emerged that has these qualities that are even able to be modeled in the way that you've done?
Yeah. It's I have been educated since university, and later also in my professional life with the efficient market hypothesis, which means that markets are always right. All the information is in the prices already. You can't make easy money. There is no arbitrage. If you make money, you have to take risk, et cetera, et cetera. And then this model comes along. And then, yeah, even for me, it was like, this can't be. This can't be this easy. So, like you and most others probably, I'm also amazed at my own model that it's not it's now so close tracking the model. And you're right, when it was published in March 2019, the price was a little under 4,000, and most people were predicting that it would go below 1,000 at the moment. So with my model in the hand, I knew that if I would publish it, that, well, most people would dismiss it right out of hand because of the efficient market, because of, well, you can't have a simple model predicting something complex like this, and it can't be this easy to make money. But other people, and especially the people that are into modeling and quants, and they would pick it up, and they would not trust me, but verify it themselves and replicate the models and come to the same conclusions, unless I had made a mistake. So I was very glad to see that people actually did that, replicate the model, try to see if they could come up with the same figures, and they did. So um, yeah, to be honest, right now, and we're about 10x further along the way, still at the beginning of what the model says is going to happen, but we're already 10x up from publishing around the 40,000 mark was 10x from the 4,000 when it was published. I have very little doubt that the model will go on for at least another 4 to 8 years. So even if I'm as amazed as you are, and everybody is, that it is this easy, um, it probably will go on for another 4 or 8 years as well. And there is only one time before in history that I have seen this happening, and that was with the Black and Scholes pricing option pricing model. So those guys had um, discovered a way of modeling the value of an option, every option basically, purely based on volatility, on the risk of another underlying asset, plus some contract specific parameters, but basically the volatility. And that was unheard of at the moment. It wasn't believed either, because until then, options were priced with as input the expected value of the underlying assets. So if you had an option of a stock market, for example, you must have a valuation and an expectations model of the future value of the stock market into that option valuation model. And now these guys said, well, that's not necessary. We can just measure the volatility, the risk of an asset, and then solely based on that variable, we can predict the option price. And nobody believed it. Maybe the math was okay. It was a very slick model. It was stolen from physics, the eye tracking a moving object. So it was a known model, but nobody believed it, and still the model worked. So the guys that invented it, Black and Scholes, were able to make money from it. I mean, lots of money, not like 1 or 10 million, but hundreds of millions of dollars, because they just followed the model for and exploited the model for 10 plus years. So
Hmm.
it takes some time before the market and people accept. Also, in this case, with stock to flow, that there is a model without even demand in it that that can track prices this closely.
Well, that's one of the other things I wanted to ask you about, because is the premise of a model like this that we were talking about, that there's going to be a rush for everyone to acquire Bitcoin, to exit the dollar, and all this kind of stuff. Um, I think maybe the challenge is that, correct me if I'm wrong, but the premise of a model like this basically boils down all of that human action to a function of a change of scarcity in the asset. right? So all, kind of the model is saying all of that stuff that goes on out in the outer world, the legacy financial system crumbling, people, wanting to get rich quick, and everything else that goes on can be boiled down to the effect that decreasing or increasing scarcity rather has on people's psychology and what they actually end up doing in their behavior. Is that the premise of this model?
Yeah, not formally a premise in that it's a formal assumption, but yeah, it can be concluded from that all the other stuff, everything except the most dominant factor in this case, scarcity, stock to flow, everything else is noise. Is canceling each other out, or at least less important than scarcity. Um, so I talked about it with Safedine as well, because this is of course an Austrian economy thing as well. The human action and the fact that one formula sort of describes the behavior and psychological things and buys and sells of 7 billion people is kind of weird. On the other hand, and this is very interesting, um, we have for the first time a constant in economics, the 21 million. So it's a bit like physics, where you have the speed of light and stuff, where you, for the first time in economics, you have a constant, and maybe that makes some things predictable in a very simple way. And of course, that's to be researched, that's to be discussed. That's just a thought that Safe had, that I have, that we discussed. But it could be that 21 million that's driving this whole thing, because it's for the first time we have an absolute scarce asset in the economy. And on the other hand, all the other factors do play a role. So the model is not 100% correct, right? You see the actual Bitcoin price overshooting the model, which is of course greed and FOMO, and you see it crash under the model, which is fear and all that. So you could even go a couple steps further and model that as well, into the model. So next to scarcity, bring some other variables in there and start modeling that. I purposely did not do that, to keep it as simple as possible and as astonishing as possible. So yeah.
So when you say, the Bitcoin price could exceed the lower bound or exceed the upper bound, you mean that has happened, or that you could model out those potentials?
Yeah, you see it has happened in the past. So in 2013, at the all-time high, it was far above the model, like 2 or 3 times above the model value. And in 2017 as well, it was far above the model. So that was an error, a model error, if you will. And you could reduce that error by including FOMO, or you model the serial correlation that's still in the errors at the moment.
Right. And so with that in mind, what in your opinion, is it possible for the model to be invalidated? And if so, what would be, what would invalidate it in terms of price action?
Yeah, it's funny that a lot of people are so focused on when the model is invalidated, while it's tracking so nicely. But it would have been invalidated 2 years ago, when the price indeed would have gone to from 4,000 to 1,000, right? If it goes down and Bitcoin goes to zero, it's gone. And I think right now you could say that if we are still at $30,000 at the end of this year, that would be, well, a bit on the low side, compared to the prediction value of 100,000, or even to 288,000 for the stock to flow X model. So yeah, if the price goes down from here or stays much lower, like a lot of the other models predict, of course, you have the time models, the rainbow models, the lengthening cycle models. Those are all pretty much lower than the stock to flow model. So yeah, I think by the end of the year, if it stays far below 100,000, then I would seriously doubt the model.
And the upper and lower bounds are established how? Are they just a standard deviation of some kind from, the center, or can you explain how those are
Yeah,
calculated?
yeah. The model is very simple. It's a linear regression on the logarithmic of stock to flow and the logarithmic of price or market value. So, and that um, regression analysis, that line, that linear line, has indeed a significance and some tests, some statistical tests. If it's a good fit, R squared, the F statistic, the T statistics, if those go off their critical values, then the model is broken. It, yeah,
Right.
and it will not be 1 month, one data point that is off that will break the model. It will be a continued period, like say 6 points or half a year far under the model, and then it's done.
Is that something that's outlined in the model, like a period of time required for, the price to be outside the bounds of the model for, I mean, or is there a statistical norm for, for judging these sorts of things?
Yes and no. Yeah, there is the T statistic for the stock to flow variable, and the F statistic for the entire formula. Those have to be significant. They have to be within certain bands. And yeah, so everybody can check that.
So that's in the original post about the model, you mean?
Yeah. There's a
Yeah.
table in the original post, but it's also if you do it yourself, if you replicate the model, it's just a regression analysis standard tests that you have to do.
Yeah.
And let me say that again and up front, it's, I mean, the model can be wrong. It can be wrong. It is by definition wrong because all models are wrong, of course, but some are useful, blah, blah, blah.
Right.
But it can be really wrong, as in not useful and spurious. So it can be that stock to flow and scarcity is not a variable that causes the price to rise. And then we'll probably notice that at the end of the year or a little bit later. And then, well, the model is wrong. So it can be spurious. It still can, but yeah, it's sort of difficult to prove that something is not spurious. The whole co-integration discussion at the time was sort of adding to that. If there was co-integration there, then there was less chance of it being spurious. But then, well, you could do the test, but you weren't allowed to do the test actually. So
Yeah, I was actually going to ask you about that because one, I agree with the point, yours and Safe's conversation about that. Now we kind of have an economic absolute measurement that's probably going to really shake things up, and it's probably more significant than we're even able to comprehend right now. But I think that's going to be a really profound thing to have moving forward for humanity in the future. But with regards to the model, I wonder if, I mean, can a model be useful and accurate for a time and then not accurate and therefore no longer useful later? So maybe, because we live in an ever-changing world, maybe the motivations that cause events to happen, whether they be in the realm of human action or otherwise, are one thing or a multitude of things for a period of time, and then they change to another thing. Now, in your model, you talk about these phase transitions where I think what you're trying to do is when we said earlier that like somehow the scarcity, that Bitcoin's increasing scarcity is distilling down all this human action in order for the price to kind of go in lockstep with the model. And I think the phase transition that you kind of graft on top of that is trying to articulate maybe some of the changing narratives that characterize the action that's being distilled down into the scarcity as Bitcoin, as the price appreciates. Uh, and you can correct me if I'm wrong on that. But I was just wondering, like in your framework, because like you said, everyone wants to know, like, when and how and will the model be invalidated, upside, downside, whatever. I mean, is it possible that for a time it literally is a truthful and accurate model. And just because it gets invalidated one way or the other in the future doesn't invalidate what it was communicating in the past. It may just suggest that another factor has taken over, in this case, the price appreciation of Bitcoin. Do you have any thoughts on
Yeah.
that? I don't know if I worded that properly, but
Oh yeah, yeah, I get you. Yeah, I think it is possible for a model to be valid for a shorter period of time. So you only have to look at weather forecast models. They are always sort of accurate or useful for a couple of days, maybe 2 days, 3 days, and then it really drops off, and you cannot basically make a 1 month weather forecast. It the parameters are changing so much, and they're so the model is it's also sensitive that that you need a new model. So yeah, like weather forecasts, we it could be that we can forecast the price until it gets to 100 trillion. The real it overtakes real estate as the ultimate store of value in the world, and then the model stops working. On the other hand, I think that scarcity is so fundamental. It's from a first principle standpoint. It's so fundamental in economics that scarce things are worth more than abundant things. That I find it kind of odd that nobody ever used it before in modeling. Well, it's the same with risk and return. Of course, risk and return. That's a fundamental relationship between those two, because risky things should return more than because otherwise everybody would be a millionaire. So, but the same with scarce things. Some things are scarce, and they should be worth more. So I think we're at the beginning of a um, journey in modeling and economics, Austrian economics, but also other economics valuations, um, where this stock to flow model, for the first time, made an attempt to model it, to model the relation between scarcity and value, but where we will see lots of improvements on the model. And of course, my model is so simple and it can be improved upon. I'm sort of amazed that not much people have done it already, put some extra variables in there, et cetera, et cetera. But I'm quite sure that even after the 100 trillion mark, um, where we probably go to a world where, for example, Bitcoin will be the unit of account, where this whole where all the other assets like real estate and gold will be valued in Bitcoin, and how would that be in a stock to flow scarcity model? So yeah, I think we're seeing we're going to see a lot of other models that are building on top of this one.
I agree. And as with so many things with regards to Bitcoin, I mean, it's so foreign. It's such a paradigm shift in so many ways that it we everybody who tries to model this, interpret this, understand this is having to go into uncharted territory with how they think and how they what frameworks they use to try to put around this thing to try to get a better appreciation for what it represents. And that I mean that in the economic, the statistical, the social, the personal, the cultural domains, in all of them, because like you were just saying, you said, why haven't people kind of done this before? It's like, well, even with something like gold, which is often you use it in your model and people are more familiar with stock to flow in reference to gold, but gold stock to flow hasn't really been changing throughout its history. Like, it's more or less the same, right?
True.
And so with something like Bitcoin, we have something that not only is it constantly changing, but it's changing at a frequency that we know how it's going to change, and what kind of impact does that have on human action when something with those characteristics is a monetary instrument and is subject to a global open 24/7 market, blah blah blah. So I agree. I would love to see more work done in this area, more people attacking this. And I know that some people have been critical of the model, and I think that's great. I think it's great to
Yeah.
try to poke holes in things and point out where things are wrong. But I just hope that doesn't that doesn't inhibit other people from putting their work out publicly so that it can be thought about and shared and critiqued and amplified by people, because this is such a unique thing that we're all trying to grapple with. And I just want to see more thought come around it and to try to understand it, not less. And to the extent that maybe sometimes the over, the harsher critiques might inhibit people that are either not anonymous, and that's one of the benefits of being anonymous, or just less a little bit less thick skinned than other people that do that. I want to see more thought and discourse about this stuff. So I appreciate the work that you've done, and the willingness that you've had to go on all these podcasts and talk to people about it and defend it and stuff like that. Do you intend on, you mentioned, you're surprised that not many people have kind of added more to it. Do you intend on doing that for yourself, or upgrading the model, or are you kind of just letting it sit as is?
No, yeah, I'm intending to upgrade it, and also what you said. I invite the critique, and I hope more people will build on it, or build other things and come with other ideas, because this is uncharted territory, Bitcoin as an asset. So um, and it's a wild world, because I never ever had encountered the kinds of critique on Twitter in my professional life, so ferocious, so hands on. But I like it. Not the trolling, not the doxing, not the lame arguments, but the very heavy and harsh critiques that are intelligent, and they're amplified on Twitter, and go much faster on the internet and Twitter than in a peer-to-peer review normally. So I really love that even more than a normal article with peer-to-peer stuff.
Yeah.
It should be this way, and please be as hard and blunt as possible, because that makes the discussion so much better. But yeah, I will build upon the model. I'm already doing that. It takes a lot of time, I should say, but but one of the things that makes Bitcoin so unique is that you have all the transactions in the blockchain. I run a node, as you know. I do have a fairly big computer with a terabyte and in RAM, so I can really slice and dice the whole UTXO set if the way I like. And you see the most amazing patterns in there. It's like quant heaven, if you will. Um, and the stuff that I see, I already see. I cannot talk too much about it right now, so I'll place my bets first. But I'm quite sure I'll come up with more publication towards the end of the year, um, where where you in fact can see, you can see some proof of this 4 year cycle, and the halving and the stock to flow scarcity thing. Why it is there, and how it works, and it's a very amazing, but it costs a lot of time, a lot of Python programming and stuff. So I hope to find that time, actually.
Yeah, well, I hope you find it too, because I'd love to see the fruits of that work. Um, Last question for you: Do you, or I guess second last, do you foresee a time in the future where maybe you're not in the current role of your day job, and things are different? Do you plan on being anonymous forever, or do because we started off this conversation sharing our kind of, or articulating what we're so enthusiastic about and what we enjoy about this community, this new country in cyberspace. And I know there's many considerations why someone might want to be anonymous, but it also obviously limits the degree to which you can engage in certain things, particularly offline. So is it something that you plan on maintaining forever, or is it kind of more temporary, situationally, something that you've been doing, and at a certain point you'll show the world who you are?
Yeah, great question. Well, in fact, I am thinking about going 24/7 Bitcoin. So leaving plan A, if you will, and going full-time plan B, because it's such an
It's hard
intriguing
to think
world.
about anything else, right?
That absolutely, and of course the monetary aspect. I mean, it's very lucrative market as well. Uh, However, I probably will stay anonymous for as long as I can. It sort of amazed me that I could take it until now, because a lot of people know actually who I am. So I meet a lot of people, of course, in my work. A lot of people know who I am, but also in well, the on Twitter, and you sort of you can probably guess who my inner circle is. Those people, I have met those people face to face, and
Hmm.
we're doing video chats. So a lot of people know who I am, and it's sort of a miracle that last 2 years nobody has even come close to my real identity. and and to come back at your point about the sovereign individual and the cyberspace, etc. world, I think Satoshi Nakamoto gave a perfect example of how anonymity can really add to the discussion. Because, for one, you're less vulnerable to personal attacks, like Craig Wright is doing right now with all the core developers, that states might be doing later, and have been doing in the past, of course, with the predecessors of Bitcoin. They have shut them down. So I can talk more freely while being anonymous, and without all the harassment and attacks that otherwise would have been there.
Hmm.
And um, I don't want to talk from a point of authority. So especially right now, that wasn't the case 2 years ago when I had 100 followers. But right now with 200,000 followers, then people just believe because Plan B says it, and I don't want that. I want people to don't trust me, verify it, and being anonymous sort of makes that more easy because it focuses the whole discussion on the content and not on me, who I am, or my credentials, which could disturb that picture. And this keeps it clean. So yeah, I try to be anonymous as long as it can.
Yeah, I think those are great points. Maybe after hyper Bitcoinization, we'll all find out who you are. But of course, we respect the privacy. Plan B, this has been a great chat. I really appreciate you granting me the time, and I appreciate your work as well. Any last words before we sign off?
Well, people can find me and follow me on Twitter, of course. Plan B at 100 trillion US dollars. And well, yeah, I really like the discussion, John. Thanks for having me. It's super, and let's see what this year is going to bring.
Yeah, it's bound to be an exciting one. So
Oh yeah.
strap in. All right, take care, mate.
Take care. Bye.
Bye bye. Still there?
Yep.
We're offline now.
Wow.
Oh, I believe actually.